Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. It's the second day of trading this week and we want to do a recap of what was happening over the week. But more importantly, we also want to get an overview of what to expect for the trading year ahead. Later on in the show, joining us virtually, we will have a member of the Genghis Capital team. This is a team that published the playbook last week. I will be able to enumerate on that later on in the show. But for a start, let's look at what was happening yesterday on the Nairobi Securities Exchange, starting off with the indices. All right, the indices are coming up. As you can see, the NSE All Share was down 2.23 percentage points to close the day at 157.04. Actually, I beg your pardon, it was up 2.23 percentage points. What was down was the NSE 20 Share Index. This was down 5 percentage points to close the day at 1,882 points. Now, this is the main index that we usually track when we are tracking the performance of the Nairobi Securities Exchange. This particular index was down 30% in the year that just ended, that is 31st of December 2020. It had lost 30% over the year. Is this the expectation, or is there some upside provided, largely because we are getting to a space where we're opening up the economy and possibly there could be some reprieve for businesses? Let's look at the other indices as well as parameters of the Nairobi Securities Exchange and see what was happening there. We have the turnover yesterday, which had actually improved compared to last week same time. Turnover was 567 million for the particular day. Who are the key movers? Let's take a look. But as you can see from this chart, we've been oscillating high days, low days. But certainly the investor sentiment has been much more stronger this time around, largely because of some key events that happened in November, which I will be detailing out in a few seconds. By way of turnover and who was driving performance yesterday, we had Safaricom, which was the top traded stock with 10.1 million shares traded at an average price of 36.45. Safaricom seems not to be abating on price. We have seen analysts cap it at a price target of 36 shillings per share, but there is numerous demand for this stock, which is pushing it, and it does look that it will be getting to the fourth floor anytime soon. Second in place was Equity Group, which traded shares of 1.54 million shares at a price average of 36.85, whereas KCB came in third with 1.385 shares traded yesterday, and East African Breweries also saw an interesting chunk of 271,000 shares traded. It is losing ground with regards to price. It's now at 148. Bamburi Cement, still another star performer there. 20 million. That was the turnover that saw investors actually trade hands on this particular stock. The average price is 46.35, coming from a low of 20 shillings per share last year. Let's see what the other parameters for the NSE are. Top movers, as mentioned, Safaricom, 10.1 million shares traded. Equity Group, 1.6 million shares traded. KCB, 1.4 million shares traded over the day. Kenya Re, 826,000 shares traded, whereas Bamburi Cement saw 447,000 shares traded. That's a magnanimous amount trading through Bamburi, which hardly moves ever. Let's see what are the performance when it comes to the price movement over the day. Top gainers, again dominated by the small caps. Unga Group was up 8.29 percentage points to close the day at 32 shillings per share. Total Kenya was up 6.38 percentage points to close the day at 25 shillings per share. Crown Points also up there, 5.26 percentage point gains to close the day at 40 shillings per share. Uchumi up slightly, 3.7 percentage points to close at 0.28. Umeme gaining a little bit of ground, up 3.64 percentage points to close the day at 7.4. Let's see what was happening on the reverse. The top losers, again dominated by the small caps. TransCentury leading the pack, down 6.94 percentage points to close the day at 1.34 shillings per share. Standard Group also losing ground, 6.67 percentage points. Longhorn was down 6.25 to close the day at 4.35 shillings per share. This is in spite the fact that schools have actually reopened, and the expectation is that some of the sectors that were underwater in the last year could possibly be coming above board. But at this point in time, investors are not buying into this story, and we're still seeing a bit of weakness in spite of the fact that the education sector has opened, and there could be an opportunity for this educational publisher to sell more content, whether digitally or in print, in the coming months. Centum continuing to lose ground there. It was down 3.98 percentage points to 15.7 shillings per share. And Kabersit also lost ground, down 3.78 percentage points to 11.45. This is after its dividend book closure had actually happened, as well as payment of a dividend happened earlier in the month. That was 9th of January. That's pretty much an overview of what is happening on the NSE on a day-to-day basis. We want to take a look at what are the expectations for the year ahead. At the beginning of the year, most stock brokerage houses normally come up with a strategy in terms of what to expect, and they reach out to their investors and give them an overview rather, if you like, of what to expect in the year ahead. Last week on Tuesday, Genghis Capital, a local stockbroker that is also licensed by the Capital Markets Authority and is allowed to trade by the Nairobi Securities Exchange, actually had a half-day conference talking about the investment climate in Kenya. This particular conference hosted members from Treasury, that's the national government, as well as stakeholders from the industry. It did cut across looking at the macro economy, the politics of the day, how this could impact. It also looked at the outlook when it comes to interest rates, inflation, which could possibly be impacted adversely by the onset of La Nina, something that the meteorological department has actually come out earlier this week and said there is a possibility of this. Last but not least, this same company also gave an overview of what to expect on the equities markets. Today, we want to take a top-down perspective, and we want to start off by understanding what is at play when we are looking at the macroeconomy. In other words, when we're looking at interest rates, what is the outlook for that? When we are looking at debt, which is becoming a bit of a hassle, or rather a bit of a sticky point for Kenya, what are the challenges there, and are there opportunities for you as an investor? We'll take a short break. When we come back, we will be joined by Mr. Churchill Ogutu, who is the head of research at Genghis Capital. He'll be taking us through his tenets when it comes to the macroeconomy, as well as the opportunities for the fixed income investor. Would you like to be part of this conversation? We highly encourage you to join us. That is at Metropole TV on all social media platforms, or at Bipemwema. We want to hear your questions. We want to hear your views. Are you excited about investments in the year 2021, or are you still a bit bearish? If nothing else, at least what we've heard from the spaces we've been in, there has been money that has been set aside. People are able to aggressively save. There is pent-up demand for investment opportunities. The question is, where are these opportunities? Let's discuss this when we come back from the break.